Good morning, ladies and gentlemen, and welcome to the AUDIOBOOM Group PLC Interim Results Investor Presentation. Throughout today's meeting, investors will be in listen-only mode. Questions are encouraged. They can be submitted at any time just using that Q&A tab situated on the right-hand corner of your screen. Type in your questions at any time and press send. The company may not be in a position to answer every question received during today's call. However, the company can review all questions submitted today and will publish those responses where it's appropriate to do so. We'll now submit a poll. If you could give that your kind attention, I'm sure the company will be most grateful. I'd now like to hand over to the management team from AUDIOBOOM. Stuart, Brad, good morning to you both.
Thank you. Good morning, everyone. Special day today. You get us both in the room together, I think, for the first time on one of these. So it's good to be with you. For those of you that don't know us, I'm Stuart Last, CEO of AUDIOBOOM. I've been CEO for the last 6 years and been with AUDIOBOOM for just over a decade, actually. So I'm pleased to be with you today.
Yeah, thanks everyone for joining. I'm Brad Clark, CFO here at the AUDIOBOOM Group. I've been with the company since March of 2018. It's been quite exciting week for the company, so I look forward to taking you through that today.
For those of you who regularly join us, I think this presentation will be slightly different. I think we'll spend the first half just focused on year-to-date performance and results. Second half will focus more on the transaction, give you more detail there, walk you through that, and then, as always, a Q&A session at the end there. So yeah, around 45 minutes today, and it will be split up and presented to you in that format. So yeah, I think key parts for today's meeting, as I said, we'll look at H1 results first. We've continued that positive growth story, positive results, everything is expected, on track to deliver a record performance for 2025. As you'll know, and as you saw on Wednesday afternoon, we also initiated first steps in our accelerated growth plan, our M&A strategy, with the acquisition of Adelicious Limited. So we'll give you more detail on that one. I think one of the key parts being that overnight we created the second largest podcast network in the UK, but we'll talk more about the rationale behind it from a strategic point of view, and obviously we're just keen to stress that this transaction just makes so much sense. It's immediately earnings accretive in 2025 and full year 26 as well. So I think a great deal and a fantastic step forward for the business. And then we'll talk more about some of the operational highlights in H1, continued expansion of Showcase, which you know is important to our growth going forward, the launch of AI within the platform, just some important steps to continue that organic growth alongside our first steps on the inorganic side. So yeah, great week for us, and excited to tell you more today. Just step back once here and just kind of give anyone that's new to AUDIOBOOM this week just a little insight into the business model and what we do. AUDIOBOOM operates in the podcasting industry. We're a platform business, and the platform does a very important, very key job of connecting three elements of podcasting together to create that value at scale globally. So the AUDIOBOOM platform works with podcasters and creators. It connects their content to audience by distributing that content out to all of the major podcast listening apps like Spotify and Apple Podcasts and Pandora in the States. And then we work with more than 10,000 advertisers to monetize that content. So without AUDIOBOOM at the heart of that, connecting those three elements together, there's limited value in podcasting. AUDIOBOOM does this very well at scale. We have more than 8,000 podcast channels running through the platform, 35 million plus unique monthly listeners, and that's before the Adelicious acquisition, and more than 100 million monthly downloads. As I said, more than 10,000 brands advertising with us. We partner with podcasts. We partner with them, and that partnership is to have exclusive distribution and monetization rights. That's how we work with podcasts. Out of those 8,000 plus channels, there's a core group of 250 major podcasts, some of the biggest podcasts in the world, that really drive the distribution and the monetization of this platform. If you listen on Spotify or Apple or elsewhere, and you click play, That piece of content will be delivered from the AUDIOBOOM platform that allows us to attach advertising and to monetize that content wherever it is listened to. And then on the advertising side, we have two major ad products. One is our premium ad product, one is Showcase, our marketplace, which I mentioned a few minutes ago. The premium ad product, that's when the host of the podcast is delivering the ads in their own voice, they're endorsing the product, their audience really trusts the host, they go out and buy the product, it's immediately measurable for the advertiser. This tends to be brands that are smaller, they're disruptor brands, they're direct-to-consumer brands, but they love podcasting because they can see the results of it immediately, and they can drive revenue through their podcast advertising. And then Showcase, that's our marketplace. It's built around the advertising tech. It's very efficient. Showcase is used more by bigger global blue chip brands because they like the scale and the efficiency that it offers, and also the targeting capabilities that it offers too. So within Showcase, if an advertiser, let's say a Procter & Gamble, wants to reach 25 to 50-year-old females in the northeast of America with household income above $100,000, we can offer that targeting to the brand, and that's a great thing for them. And with the recent addition of AI, which we'll talk about a little later, into Showcase, we're able to offer them other tools like brand safety tools that are very important to them as we do more and more work with those bigger blue chip global brands. So that's, I think, a very kind of quick and hopefully clear overview of the AUDIOBOOM platform and what we do every day within AUDIOBOOM and what we're really focused on here. And then we'll walk through our H1 2025 performance, and then Brad will give you some more focused detail on some of this. But in terms of revenue for H1, $35.1 million, modestly up on last year, but as we've kind of been talking about over the last 12 months, our real focus has been delivering higher quality revenue, and you can see that happening here. 7.4 million of gross profit. So that gross profit line, what AUDIOBOOM retains after revenue shares with those content creators, with those podcasters, 7.4 million. That's up 30% versus the same period last year. And then again, you can now see that gearing to EBITDA as well. 1.8 million of adjusted EBITDA in H1, up 500% versus the same time last year. So still looking at that top line growth, but it's going to be higher quality revenue that will flow through our P&L and start to gear EBITDA, as you can see that we've done significantly last year. So we continue AUDIOBOOM on a standalone pre-acquisition basis. Still continue to be on track to deliver the 80 million and 4.5 million of adjusted EBITDA that the market expects. Now, obviously, with the acquisition of Adelicious, that changes. Updated broker market expectation of 83.2 million for the year and 4.9 million of adjusted EBITDA. And again, we'll give you more detail on that when we talk about the Adelicious acquisition. As it stands today, AUDIOBOOM on a standalone basis has more than 70 million of that first 80 million booked. That's already on the books. We're ahead of 5 million ahead of where we were at this point last year, and you can kind of see that pathway, I think, to delivering that record year for the business. And then Showcase, as we mentioned earlier on, just continues to be that fastest growing part of our revenue mix. And the key thing there with Showcase is that higher gross margin that it comes with. So 24% year-on-year growth, H1 of this year to last year, really a key part of our work and our focus going forward is to continue growing Showcase. That will deliver the stronger gross margin, gross profit, and will gear EBITDA across the second half of the year. Brad.
Yeah, thanks, Stuart. So here we see, guys, the change in revenue contribution, first half of this year versus first half of last year. And as Stuart said, we've seen an increase in those revenue lines, which contribute a higher gross margin, being Showcase at 30% and Premium at 20%. So In the detail for the first half of this year, premium where those hosts endorse products, that grew by 1.6 million or 9% up to 19.5 million. Showcase increased by 24% or $2.3 million up to 11.6 million. Sonic, our third product, where we, so effectively a brand agency placing spend across any globally available podcast, that contributes 15% gross margin. That decreased by 2.9 million or 43%. So we've seen AUDIOBOOM increase by 3.9 million, Sonic increased by 2.9 million, hence our gross revenues increased by $1 million. Now, the point to note with Sonic is that we're going to see a shift in spend this year versus last. So for 2024, we saw spend weighted towards the first half of the year, lowering in the second half. This year, what we'll see is lower spend in the first half and higher spend in the second half of the year, because the spend is concentrated around the fantasy sports NFL season. We'll see that increase as we go through the second half of the year. So we can see the detail there on the contribution. We've seen that gross profit increase by 30%, and as we'll see shortly, because of our relatively stable fixed OPEX base, we've seen that EBITDA increase 6 times in the first half of the year versus last. Okay, we can see the revenue trends here. There's seasonality in the revenue that we recognise at AUDIOBOOM, where it's weighted towards the second half of the year. That happened last year. It's going to happen again this year. We can see that revenue trend on the top left-hand corner. The top right-hand corner, we can see the gross profit increases, and we can see that gross margin increasing as well. So to those new to the story, the gross revenue that we recognise is the amount that we invoice brands, so we collect that. Cost of sales is what we pay to our podcast partners, and that leaves us with the gross profit or net revenue, you can also call it that, in terms of what AUDIOBOOM retains. So our gross margin for the second quarter reached 23%, and actually in June it reached 25%. So we can see that scaling as we went through the year. I wouldn't expect it to go above that level, but we can see good progression on that gross margin versus last year. At the bottom right-hand corner, we can see what we call as minimum guaranteed true-ups. So when we enter into agreements with our podcast partners, we guarantee them amounts of revenue over that contractual period. Because of the seasonality in revenue, there may be instances where we true up to that minimum guarantee level, and because our revenue is weighted into the second half of the year, we may see minimum guarantee true-ups at a higher level in the first half, and then they lower in the second half of the year. And we've seen that percentage reduce. Back in 2023, there was challenging advertising market conditions. The company's restructured a lot of its contracts, and we've seen those minimum guaranteed true-ups fall to a lower level as we've gone through the last few quarters. We'd expect those to still be there in the second half of the year, but at a lower level. And that's good for our gross profit, recognising higher gross margin as those commitments are met, and we'll see that through the second half of the year as well. And this is the OPEX base that I mentioned earlier on. So we can see that over the last year and a half. That's been very, very stable, about $2.9 million, $2.8 million a quarter. 60% of our costs is in relation to salaries and commissions. We've got 42 heads within AUDIOBOOM before the acquisition. That 60% of the cost is related to that. 20% is in relation to technology costs and running the platform that we have at AUDIOBOOM. But that OPEX base has been very, very stable. Hence why we're saying once that revenue grows, once that gross margin grows, more of that's going to drop down to the profit line. We're expecting that to go forwards. We'll come to Adelicious shortly, but on an OPEX base, we're adding on around $250,000 to $300,000 per quarter. So you will see that next time increase, but that's because of the acquisition, but the fundamentals still stay the same in terms of a relatively stable OPEX base within the company. And in terms of the cash and working capital cycle of the business, so the cash collection cycle continues to work well, collecting 103% of revenue booked in the first half of the year. But what we noted in Q2 was that actually reduced to 93% of invoicing in the second quarter. So what we saw was that we collected a significant amount of cash post quarter end as our customers preserve their own cash. What we've actually seen as well as a number of new agencies that we're working with have slower payment terms, so more towards the 90-day mark, which has impacted that cash out. As we can see from the right-hand side, the amount that's provided for in terms of any bad debt actually as a percentage of revenue remains at a very small level. So in the first half of this year, $90,000 against just over $35 million booked is a very, very small proportion. So simplistically, once we invoice that amount, we're very, very certain of collecting it. But there is, we have noticed that trend of debtors being slightly slower to pay. We pay our leading podcast partners on 30-day terms, collecting on an average of 80 days. So there's that timing difference between paying people and collecting. But we're very, very good at collecting, and that's what we're going to be focused on very well during the second half of the year. What we'll note during the third quarter is that revenue increased in June. It will step off slightly in July, so we'll be paying lower revenue shares at the start of the quarter, but collecting on the higher revenue months at the end of Q2. So we should expect that cash position to improve slightly as we go through the end of the quarter. And also as well, the company does have an onerous contract which is unwinding, and that finishes at the end of December. At the end of June, we have $1.5 million of that provision left. That will unwind, and as we step into 2026, the company will not need to pay between $250,000 and $300,000 per month to true that contract up. So that'll be cash that will be retained within the business. And you'll see from the forecast that we expect cash to be relatively flat this year. But then as we get into 2026, with the end of the onerous contract and increased performance, we should start to see that cash position grow, and EBITDA being more of a proxy for cash generation, because there's only a lease cost in terms of cash costs below the EBITDA line. So that's our expectation going forward into 2026, is that cash generation.
Thanks, Grant. That was a great, and I think all of our positive performance and strong numbers across the business over these past few years have really led us to establish a strong position, particularly in the US podcast market. So all of this has come together. It's positioned AudioBoom as the fifth largest podcast network in the US, where the majority of our focus has been to this point, in the most lucrative podcast market in the world. And we keep incredible company, I think, in that top 10. Giant businesses ahead of us. Wondery is owned by Amazon, iHeartMedia, SiriusXM, Spotify, all huge companies. NPR being the BBC of the US, the New York Times is in there. Odyssey is a large radio group. So very proud of our position in the US. And we haven't had such strong growth and traction in the UK. We haven't focused on that market as much, and that's one of the factors behind the acquisition of Adelicious that we announced this week. But also, I think key to that acquisition is the recognition that AudioBoom's platform business is really well primed to be a consolidator in this space. So when you look at that top 10 on the left-hand side here, one key point is that they only control around 25% of the revenue in the US and in UK in podcasting. So podcasting remains extremely fragmented. The other 75% of that revenue in the US and the UK is running through more than 100 small independent networks and publishers. And one key point to those networks and publishers, those small networks and publishers, is that they do not own or operate their own technology or platform. They're very reliant on third-party platforming and technology. And we've recognized that consolidation of these 100 is something that we can lead on, and something that will accelerate our growth in the coming years through an M&A strategy. So we believe that our platform will do a great job of allowing any targets that we bring onto it the ability to really focus on what they do best, which is content creation, content curation, running a network. Our platform will supercharge their distribution, their marketing, their monetization monetization of that content. So yeah, we believe we can be a leader in the inevitable consolidation of podcasting over the coming years. And our first target, and I think a perfect first target, and we announced this week the acquisition of Adelicious. Adelicious are a UK podcasting company. So as I said before, we had great great success in the US. Had focused less on the UK, but Adelicious, combined with our UK AUDIOBOOM team, is now positioned really strongly to lead the market in the UK. You'll recognise, I think, a lot of faces on this slide. Adelicious, has a very similar business model to AUDIOBOOM. It partners with talent, partners with podcasts, and monetizes that content for the podcasters. They have great relationships in the UK with talent agents, with management companies. They do a really good job of working with well-known talent and entertainment podcasts. And to give you a view on what they've achieved to this point, after launching just 4.5 years ago, they became the 4th largest network in the UK, and they have 50 premium podcasts, but many more other podcasts running through their network. They have around 20 million monthly downloads, so that would be added on top of AUDIOBOOM's 100 million downloads. So much more advertising inventory and content for us to monetize together. 5 million unique listeners to Adelicious podcasts, and in 2025 they're expected to deliver 7.6 million of revenue. That's a conservative number, we feel, and 3.2 million of that, again, I believe a conservative number, will be recognized by AUDIOBOOM in its 2025 number. So obviously the transaction completes after the half year, so less than half of a year, Adelicious within the group, and as I said, conservatively 3.2 million of their revenue for 2025 will be recognized by AUDIOBOOM. In terms of the rationale, I think this is a great deal, and it's very clear on why it was the right first acquisition for AUDIOBOOM. So you can see on the left here, as of 3 days ago, Adelicious was the 4th largest podcast network, AUDIOBOOM the 5th largest podcast network in the UK market. Putting the two of them together creates the 2nd largest podcast network in the UK, with a very kind of clear pathway, I think, to becoming an ambition to becoming number 1 by 2030. So I think when we think about whether to buy or build, we could have invested in our UK operation, but I do believe this acquisition has kind of fast forwarded that position by around 5 or 6 years. So we decided to buy here, taking market share, building out a strong UK operation. And in terms of why do it now through an acquisition, well, I think timing is very important. So the UK podcast industry has been underinvested in to this point. Just on a per capita basis, brands and advertisers are investing $1.60 per capita into the UK podcast space. In the US, with that mature podcast industry, they are investing around $7. So we believe there is a big delta here, and we believe that this will start to correct in the coming years. We're seeing the momentum, we're seeing the data around listenership in the UK, time spent listening in the UK, and brands beginning to step into podcasting. So we believe that this will start to correct. By taking that expanded position today through the acquisition of Adelicious, we are really positioning ourselves to capture a greater share of that upside that's going to come over the next 5 years. So to give you an overview of the transaction details, I'm sure you've read about them over the past couple of days, but we'll break that down into a little more detail. I think a key part to me, and I'll show you a slide on this in a moment, it is just what a fantastic deal this was to be able to acquire Adelicious for slightly less than 1 times their 2025 revenue. Wherever the consideration lands through the initial and the earnouts, we're able to acquire them at around 1x of their 2025 revenue, which is much lower than any of the transactions that are happening in podcasting, particularly in the US market. So we believe this is a great deal for the company and shareholders. So the initial consideration that we'll pay is £4.5 million. That will be delivered 60% in cash, 40% in shares. The successful and oversubscribed placing was to raise that £2.7 million in cash. The 40% that is going to the sales in shares was agreed at the 90-day VWAP as of the 15th of May when the letter of intent was signed, which means that those shares will be 405,000 shares at a price of £4.44. So AUDIOBOOM receiving a significant discount to where the share price is today on that element of the initial consideration, which again really helps this deal be accretive from day one and to prove positive for all of us. Two elements of deferred consideration. Up to 3 million earnout based on what they deliver this year in 2025 revenue. So, that revenue, wherever they land between £4.4 million and £8 million, there'll be a kind of a prorated payment up to £3 million based on their achievements this year in terms of revenue, and then a further £2.5 million of deferred consideration payable connected to one key podcast that they have. So if that podcast delivers in full, with AUDIOBOOM seeing its full gross margin over the 2-year life of that podcast contract, and a further £2.5 million will be payable. Those deferred consideration elements will be payable next June, and then in May of 2027, 40% in cash, which we expect to pay from company cash reserves, and 40% in shares, and then a further 20% our own discretion. So that's I think the breakdown of the transaction details. All of that said, wherever this lands, including the deferred consideration, we land at a kind of a 1x revenue multiple. These are the comps in the podcasting space over the last 5 to 7 years. Almost all of them done well above that 1x level, the median being 4.4x, and again just speaks, I think, to the fantastic deal that we've been able to put together here. We understand, I think, that this is our first time doing this as a company, and if we want to further our accelerated strategy through further M&A, we really do need to execute well on this. And the joy of Adelicious is a very straightforward business model that matches much of what we do. That will make the integration very short, very efficient, create a very quick pathway, I think, to creating those synergies. I'll outline some key points, I think, for you today, which will help you understand that. I think the first one being Andy Goldsmith, the CEO of Adelicious, and his expanded role within AUDIOBOOM. So Andy has joined Adelicious a few years ago from Global Media and The Guardian. He's been really the driving force behind the growth of Adelicious. And he'll take on an expanded role within our UK operation, focused on business development, content operations, and advertising sales. He will lead that widened team. He'll also join the AUDIOBOOM management team. So I think he's going to be a really great addition to AUDIOBOOM and AUDIOBOOM's executive team. Other key parts, I think, to the integration is our ability to connect Showcase, our ad marketplace, into their inventory very quickly within the first 30 days. That's going to deliver some immediate incremental revenue. We will consolidate the UK sales team, so the Adelicious sales team and the AUDIOBOOM sales team will come together. Each of them will bring unique customers to the table who can then buy advertising inventory across the opposite roster effectively. So unique advertisers in Adelicious will now be able to access the AudioBoom podcast roster and vice versa. Again, that's going to be pretty quick incremental revenue there as well through that UK sales consolidation. Switching over teams to the London office, and then switching over into AudioBoom technology stack and the AudioBoom platform, and switching off the third-party software and IT platform that Adelicious is reliant on will happen within the first 60 days. And that's going to save significant money, and also just make this thing more optimized, having full view and intelligence around advertising inventory and everything Adelicious does will be a key part. And then for 2026, as we talked to you all about before, we do a lot of our advertising sales work in the October and November of the preceding year. So it's really important to us, and we'll have a real focus on ensuring that all of that Adelicious content and advertising inventory is brought into our inventory intelligence platform ahead of that upfront buying system. So, generally when we go into a new year, we've already booked around 50% of the revenue for the year, working with our biggest customers in that upfront season, just ensuring that Adelicious inventory is in our platform. We have full view on it, intelligence around it will allow us to sell it well ahead of 2026. And be in a good spot for next year as we grow together. So I think in summation, on Adelicious, perfect company for us to initiate our growth plans with, a lot of shared ambition and a lot of shared vision for the UK podcast space. On day one, we've created the second largest podcast network. I think it's a really great deal for AudioBoom, and really does set out our intentions for the future. So just a couple more slides for us before the Q&A. So getting final questions in for that one. Obviously, as part of the Adelicious acquisition, we've seen the market expectations for 2026 being upgraded, and that comes off the back of some strong historic performance for AudioBoom, some very consistent performance for AudioBoom. So the 2025 revenue market expectation lifts to 83.2 million. As I said, 3.2 million of that Adelicious revenue for the year will be recognized by AudioBoom in 2025 as they join the group past the halfway point. And then in 2026, that revenue market expectation will be at 94.5 million. You can see here the continued strong progress in our gross profit. We talked a lot about that quality of revenue, and you'll see the upgrades here in terms of what that looks like for 2025 and then 2026. And the same with EBITDA, continued gearing of EBITDA expected. We'll recognize around 0.4 million of EBITDA from Adelicious this year, in the remaining part of this year after they've joined the group. And then that 2026 adjusted EBITDA market expectation of $7.2 million. So you can see how this acquisition is flowing through the company and helping us build over the coming years. And as I said before, I think to sum things up, this acquisition initiates that growth strategy, has 20 million monthly downloads, 5 million unique listeners to our platform, allows us to take that lead role in consolidating the US and UK podcast markets, lifts those revenue expectations, and as I said, right at the top here, it's immediately earnings enhancing. So a great deal for AudioBoom, and just sets us up for a good spot for the rest of this year and the future too.
That's great. Brad, thank you very much indeed for the investigation. Please continue to submit your questions just using the Q&A tab on the right-hand corner of the screen. But while Brad and Stuart take a couple of moments to review your questions submitted already, I'd just like to remind you, a recording of this presentation, along with a copy of the slides, will be available via the platform a bit later on. Brad, Stuart, you can see I've had a number of questions from investors, so thank you to everybody for your engagement, both ahead of today's event and throughout today's presentation. If I may just hand back to you guys, and I'll pick up from you at the end.
Yeah, thank you. So obviously, I think that, lots of questions about the transaction. So we'll try and cover as much of those and give you a bit more detail as possible here or on there. So yeah, as we said, we believe it's a great deal for AUDIOBOOM at less than a 1x revenue with that immediate accretion. I think key points being that being able to deliver 40% of the consideration at a £4.44 share price is really great business. But we recognise that there may be some disappointment with the placing price. But it's tough when we put out a positive Q2 trading update last week, and then we saw an immediate sell-off and lowering of the share price. It's just it really is another example of share price and performance not matching up on AIM. We saw that drop off, and that obviously didn't help with maintaining that placing price. But to give you some background, we ran a very tight fundraise, completed in under 4 days. And we ran into a very targeted group of investors. One key goal that we had here, alongside raising the money, obviously, was to bolster the level of long-term institutional holdings, which we've done, to help remove that volatility that we've just had a history of because of the heavy retail shareholding. So we recognise the frustration on the price, but this was done with that intention of institutionalising the shareholder register. We've done a great job of that. Very targeted, very tight fundraise here. Directors did not participate in the placing, and that was to help institutionalise the register. And then I can final point perhaps on this one is that we did assess whether or not to do a retail offering, but really due to that price falling after those positive Q2 results, and then the tight discount to that price, we just felt that we couldn't take any further dilution here. And I think we've made the right decision there, and I think the market really does look like they understand the positives of this transaction and is being supportive. I've got one more, Brad, and then I'll throw it to you perhaps. The other question that we've seen a few times here is just on share buybacks. I think this came in following our AGM notice, where we included a standard resolution. We do that every year. We include a standard resolution each year in the AGM notice, which will give us the authority to buy back shares if we want to. In terms of how we use cash, as Brad spoke to earlier, cash will be pretty static across 2020-25, and then in 2026, EBITDA becomes a proxy for cash once again. So we start building cash within the business. As we talked about earlier, we believe we're a great platform for M&A. So use of that cash as it grows next year will just need to be considered alongside those M&A goals as well. So that share buyback authority is a standard resolution we have in there every single year. Just as a reminder, the AGM will be on July 30th.
Yeah, thanks. There's a question from Paul T, I think, during the session about the EBITDA weighting. And as we went through earlier, the revenue's weighted to the second half of the year, and the EBITDA is as well. So last year, during the second half of the year, the company generated $3.1 million of EBITDA. To meet its market expectations this year, the company needs to do the same. Generate that 3.1 to go from 1.8 up to 4.9. So yeah, there is that seasonality there in the EBITDA as well. Further question I've seen as well, just to clarify on the cash position within the company, the onerous contract I mentioned earlier on, the company provided for that in 2023, $7.5 million of provision. That has been unwinding on the balance sheet since that point, and as at the end of June, that is now $1.5 million. So that impact during 2024 and 2025 hasn't been impacting the P&L. So that's not a cost reduction. That's simply a provision that's unwinding against the balance sheet. That's simply the cash that's being paid for that contract. That's why, just to clarify, when we say that the cash will increase next year during 2026, that's effectively the company. A big part of that is the company not having to pay that onerous contract. So just to clarify that in terms of the cost and the cash within the company.
Well, I think I'm kind of done. If you have a quick question here from Martin about YouTube, nothing asking about whether there's developments on YouTube opening up to allow automated advertising. Nothing, I think nothing more than we spoke about perhaps last time, but we believe the intention is there to allow us to advertise in the future through YouTube. Right now, our premium advertising can run through YouTube, but Showcase cannot run through YouTube. So we do a really great job on monetizing video content and video podcasting with our premium monetization. And as Martin kind of hints at here, YouTube have stated that they will start to allow pass-through of podcast distribution and and potentially automated advertising as well. So we'll keep an eye on that, and video is definitely an area that we are focused on in the future.
Another one, cost of integration, are they material? No, we don't view them as material. That process is underway. We don't view any significant costs associated with that. We need to get as Stuart said, the inventory onto our platform, but there's experts within both companies, and from the AUDIOBOOM side, the technology that we use, the team have been through that process on an AUDIOBOOM standalone basis. So no material costs expected. You review the company as we get to know it further over the coming weeks and months. But reviewing that is quite a straightforward process, as Stuart said earlier on.
Another one here from Martin. How do you see the US ad market in H2 given macro uncertainty? I think it's great question. Obviously, I think it's a question I get asked a lot. I think it's very stable right now. There was certainly some uncertainty around Trump's tariff announcements back in April. We didn't see any big knee-jerk reactions from advertisers pulling budgets or cancelling campaigns, but certainly some nervousness, I think, around around what could potentially happen. I think that's drifted. I think that there's a kind of a confidence level in the advertising podcast advertising space anyway. I mean, obviously there was some negative WPP announcements last week, but you have to remember that the majority of what they do is on legacy media. Publishing, TV, and podcasting is new media and an exciting space that advertisers want to be in. So no, I think I would describe the current position as being very stable.
And then final one on Adelicious margins. Will we expect any improvement on those? Well, Adelicious gross margin runs just above 20%, between 20 and 22%. So in terms of the mix that we have, we wouldn't expect to see any jump up in margin, but obviously across the group, we've seen that margin profile increase because of the increased contribution in Showcase. So that we're going to see slight improvement on that over the coming months and years. But Adelicious complements what we do within AUDIOBOOM currently. So no major changes in margin profile as we go forwards. Apart from obviously striving to achieve the general upward trend that we recognised over the last 18 months.
Thanks, Brad. I think we are right at the end. It's 11:15. So thank you all of you for joining. Thank you for your questions, and we really do believe in this transaction. I hope you can understand the logic behind it and the positives that it's going to bring.
That's great. Brad, Stuart, thank you once again for updating investors this morning. If I could please ask investors not to close this session, as we'll now automatically redirect you for the opportunity to provide your feedback in order that the company can better understand your views and expectations. This may take a few moments to complete, but I'm sure it'll be greatly valued by the company. On behalf of the management team of AUDIOBOOM, we'd like to thank you for attending today's presentation and wish you a good rest of your day.